Hello, my name is William Bayless, and for my final project, I chose to do a financial analysis between CVS Healthcare and Pfizer Pharmaceutical. Over the last 5 years, CVS Healthcare has experienced significant growth, including the acquisitions of Karam, Navarro, Omnicare, Target Pharmacies, and most recently, Aetna. Their current growth trend indicates that they will continue to expand, particularly in the field of pharmaceuticals. Strongest revenues for the company are seen through its consumer pharmacy services segment. Pfizer, on the other hand, is one of the world's largest and most successful long-running pharmaceutical companies. The company develops and produces various medicines and vaccines that are used across a wide range of the medical field and around the world. The net worth of this company allows for its viability to take on subsidiaries in the healthcare sector, and it consistently ranks in the top 100 companies out of Fortune's 500 list. It is also a representative company on the Dow Jones Industrial Average. When looking at a comparison between the company's income statements, you can see that CVS saw 4% growth in gross revenues from 2016 to 17, when Pfizer realized a negative 0.5% reduction in gross revenues for the same period. Now, net income for CVS increased 24.5% for that period, whereas Pfizer saw an astounding increase of 195.3% growth in net income from 16 to 17. Now, it should be noted that since Pfizer deals in a more research-oriented side of the healthcare marketplace versus CVS's retail aspect of the marketplace, it sees a great deal more volatility in its net incomes. When looking at the balance sheet, you see similar trends. CVS tracks actively reducing their liabilities while increasing their total assets over the 5-year period that is analyzed. Pfizer, on the other hand, you see a 5-year decrease in total assets, but an increase in debt over the observation period. Now, for this project, 5-year average on the financial statements was completed, and then the financial ratios were completed off of that. When looking at liquidity, debt, and profitability, 5-year trends show Pfizer in a very positive light based on the averages. The company has a stronger current, cash, and quick ratio. They all outperform CVS. And then when asset utilization, management efficiency, and market measures were looked at, CVS did outperform Pfizer on some of these. CVS has a higher total asset turnover, a faster inventory turnover, and a stronger accounts receivable turnover than Pfizer. But the market measures were mixed between the two firms, as the price-earnings ratio is stronger for Pfizer, but the earnings per share is stronger for CVS. Dividend payout is stronger for Pfizer as well. When looking at the forecast expectations and the analyst recommendations between the companies, you can see that CVS is expected to have 1-year growth of 19.5%. This is against Pfizer's expected 1-year growth of 13.6%. A lot of the growth that CVS is expecting is due to the expansion of their minute clinics. They're going to open up more doors for that, and that is expected to add between 45 and 145 million to the firm's gross revenues. Pfizer is expected to see their expansion due to the cancer drug marketplace. The forecast expectations for them are that oncology sales are going to wind up making up 13% of the firm's total revenues in 2018. And they're only expecting this market segment to increase. And so if we were looking at each of the firms, either one would be a very respectable portfolio holding. If you're going to look at just strictly, growth and stability, CVS might edge out Pfizer because the 1-year expectations are for stronger growth. And if you look at historical financials, CVS has a much more consistent trend for growth, whereas Pfizer sees a little bit more volatility. Thank you.